A very warm welcome to another edition of Gold Sessions. My name is Jonny Haycock, partner at von Greyerz. It is an honor today to be having a chat with Egon von Greyerz, founder of our business. Egon, welcome to the show.
Thank you, Jonny. It's good to talk to you.
It's hard to know where to start because it seems that we're talking at the most timely moment in politics, in economics, and in markets. But the silver move in the last week specifically is something that I do want to touch on first before we get on to other areas. It surged through key resistance levels, a significant break above 54.55. I'd love to get your take on what we're seeing in the silver market specifically at the moment. Thank you.
Thanks, Jonny. Well, we having had a long life from a personal point of view and professional point of view, you see a lot of things during that time, and every time something more extraordinary happens, you think, this is very special. But if you look back in history, everything that we see now has happened before, and therefore I'm not surprised. But of course, I do think it's different now. I know that's an expression you should avoid. But we started this business of wealth preservation in the form of physical gold and silver 25 years ago. But I was thinking about it for at least for the last 35 years. Because it was clear to me that as the risk was mounting, as debts were mounting, as derivatives were mounting, that we were getting to the end of a monetary era. And a monetary era always ends in a debt explosion, and then, a collapse of the currency, a collapse of the financial system, social unrest, etc. So that was what I was talking about already 35 years ago. I came to the conclusion, of course, that gold and silver, to some extent, were the best forms of assets to hold for wealth preservation purposes. They're nature's money and only money that has survived in history. So, and of course, you talked about silver. We always, of course, the king of the metals is gold, but right now silver is particularly interesting, and also it's interesting to know that whenever the metals make a big move, and that's what's happening now, the gold-silver ratio starts coming down. And the gold-silver ratio is very high now. It's been over 120, it's been 80 for a while, and now it's down in the 70s. And we will see that going to maybe 30 or even 15, the long-term average of the gold-silver ratio. So the gold-silver ratio means simply gold price divided by the silver price. So now, the move, you remember, I've been around for a long time. So 1980 was the first peak we saw in gold at $850, and then silver was $50, and then silver came down to under $10. I think came down to $5 even, and gold corrected also, but not to the same extent. And then again back in 2011, gold was $1,920 and silver was $50 again. So gold had more than doubled and silver was the same top as 30 years earlier. And again, we had a big correction, always bigger in silver. And now we're again back to 50 for silver, but at over 4,200 for gold. So this is unique, and this is for the first time silver is actually coming above the $50 level. And I think this is just the beginning. We are now going to see an acceleration of silver through 50, 60, 70, 80, etc. And I think, if you compare on an adjusted level, if silver goes up as much as gold has since 1980, then silver should today be about $250. And I think that's just a start. We are going to see the most massive explosion in the silver price I mean, I call this $50 line resistance line, and it isn't resistance anymore because we've gone through it properly. But the market is still holding it at around $55, $57. I think we're going to see it all of a sudden just explode. And that's not sensational. That's just a reflection of the demand for silver. The silver industrial demand has gone from 10% of silver use to 50%. 50% of all silver is now used for industrial production. And then the investment demand, there is always a shortage every year. So we're seeing massive shortages in the physical market. And for commercial purposes, silver is, of course, used for anything from solar cells to car batteries to electric and electronic products. And that, as I said, there's major demand. And Jonny, nobody realizes, because all of the trading in silver is basically paper. And no one has ever successfully used paper for a car battery, an electric car battery, or a solar panel. So we're not going to. We know there will not be enough silver at these prices. So there will be this. They will jump all of a sudden, and that. So I see silver as just a sign now, or not just of silver demand, but actually as a sign of the beginning of the accelerated fall of this monetary era, which obviously means also currencies are going to collapse, inflation is going to rise, and markets will also come down dramatically, stock market. So,
I think this is sorry to interrupt, but I think this is what is different about today versus 1980, and of course the Hunt brothers cornering the market back then is that the industrial usage for the metal today is obviously far, far, far greater today because of the EV transition, defense, electronics, solar, etc., in a way that it wasn't back in 1980. And therefore, you're consistently going to get that incremental demand at a time where there just isn't the supply. And as someone rather famous said, it's rather like threading a camel through the eye of the needle, trying to satisfy the demand when there just isn't the supply in the market. And I wonder whether this dislocation between the paper market and the physical market is exactly what we saw last week.
Yes, exactly. I mean, that's the beginning, and there has been a shortage of about 200 million ounces every year for the last 5 years of silver. They make that up by manipulating the futures market and borrowing silver, etc. That's not going to be possible in the future. People will, as I have said for many years, ask for delivery, and when they ask for delivery, there will not be any silver there, no silver at this price. That's why we're going to see the most massive explosion, as I said. And that's just the beginning of, as I said, the accelerated fall of this monetary era. Of course, gold will follow, not as fast as silver, because there's not the same type of shortages in the gold market as there is in the silver market. But the metals will now start the final phase in this era of climbing to levels that will be multiples of current levels.
I just wonder whether the dislocation that we saw last week over thin trading with Thanksgiving, and of course they CME closed for many hours, and they talked about a cooling system, and there are lots of conspiracy theories out there suggesting why. But it is interesting to me, Egon, and I know you and I touched on this before the call, that we did see the Fed Reserve pump $13.5 billion into the US banking system through overnight repos last week. And it's kind of interesting that it coincided exactly with this stress in that we saw in the silver market. I don't know, I've got no insight, but it's an interesting data point.
Yes, you always get these warnings, whether it is through the precious metals markets or whether it's through, of course, the Fed starting to act. Remember, COVID started early 2020, but already, and we reported on that, our colleague Matthew Piepenberg and myself, that the Fed was in there supporting the banking system already in August, September 2019. That was the first sign of that there are problems in the banking system, and the same now. It's very clear. This as part of this final fall of the monetary system, the financial system will not look the same as it does now. There'll be major problems and major defaults within the financial system, and as I've always worried about the derivatives, as you know, and I think derivatives, if you include shadow banking system and a lot of things that are not being recorded, we are in the quadrillions, maybe a couple of quadrillion derivatives around the world.
Well, it is. I mean, it is interesting. I do think it's a really important data point. This for our viewers that understandably don't understand the plumbing of the financial system in the way that you do, Egon. But I do note that this liquidity injection is the second largest liquidity injection since COVID, and as you say, it does typically tend to herald another event or is a canary in the coal mine. So I think it's a very, very important data point, and it actually surpasses the peak of the dot-com bubble in terms of liquidity injection. So I think it's a very, very important point. I just want to, just in terms of wealth preservation, look, you've always said, look, gold is the king of money. Silver's sort of the unruly younger brother that can reward handsomely at various points in the cycle. And you've always argued for our clients that they should have, as far as their precious metals allocation is concerned, 80% in gold and 20% in silver. And then when the gold-silver ratio was over 100, I think it was in February of this year, you advised, look, you should shift it more to 70-30. Is that still the right ratio today?
I think it is today. Even when you say we haven't always said 20% silver, because from the first certainly 10, 15 years, we advised people who wanted to sleep at night and not worry about volatility to hold only gold. And that was correct. You remember, as I said before, silver in 1980 went to $50 and then down to $5.
Yeah.
So not many investors can live with that. And of course, people never sell at the top, they sell at the bottom. But this is why, as I said, we told investors not to hold silver, certainly until let's say 2013, 14, 15, or any major amounts of silver. I think our clients held from 2013, 14, maybe 15% roughly. And now, as you said, I think that comfortably, I see now silver not being just another precious metal, but it's also probably the most exciting investment combined with wealth preservation that is available today for people who want to both protect risk and see a major upside. So I would be happy to be overweight in silver now versus gold. I mean, not in totality, but high percentage that we have recommended before. So certainly 30% or even 35 right now, I would recommend, because we're going to see the ride of a lifetime. And remember, it's not Bitcoin here. It's not speculative. It's not something that can go to zero. It's money. That's always been money for thousands of years, both gold and silver. And it's not, therefore, you're actually having wealth protection at the same time as an opportunity to really make some good returns.
Yeah, wealth, a beautiful combination of wealth preservation and wealth enhancement.
Yeah.
At the same time, and that doesn't come along that often. And I remember when we were in Zurich 3 weeks ago, and we had a chatting to Rick Rule, and he made the point very, very clearly. Look, proper bull markets in precious metals don't come along that often. The last great one, of course, was the 70s. But when they do come along, don't waste it.
Yeah.
Don't waste it.
And we see investors buying when it goes up, and then when it comes down, and you get a really correct. We've seen no major correction lately, but even smaller ones. This is when you should buy. Remember that I was watching gold for many years because it went from, as I said before, in 1980, went from 850 down to 250 in 99. And we waited for it to consolidate and then see that it came up above $300. And that's when we bought ourselves and recommended to our investors to put as much as 50% of their assets into gold at $300. That's what we did. That was a very good entry point for wealth preservation. But even today at $4,000, we have a long way to go. So, anyone who wasn't in from the beginning, you haven't missed the boat yet. Actually, that's I show in one of my illustrations a picture a friend of mine has done, which is is not too late to jump on the gold wagon.
Okay. Well, look, it sort of brings nicely on to my friend and former colleague Mike Wilson, of course, at Morgan Stanley, who now almost has become infamous for being the first sort of Wall Street strategist to talk about a 60-20-20 portfolio as opposed to a 60-40 portfolio, equities and bonds, arguing that it's just outdated in a world where you need to protect yourself against currency debasement and inflation. But of course, it's impossible to allocate 20% because there isn't the gold in the world to be able to do that without ridiculously high prices. But even just getting to 1%, it would be pretty much impossible. But it just gives you another idea as to this supply-demand mismatch that we're seeing in precious metals. Let's just move on quickly because I'm conscious of time. It's going to be a snappy 20-25-minute interview or chat, Egon. A little bit just on politics and the contrast that we see between, frankly, what looks like a mess in the UK versus the stability that we're seeing in Switzerland at the moment, and the importance of choosing the right jurisdiction to store your gold and silver. Can you just comment a bit on that, please?
Yeah. As part of my writings and thinking in the last 25 years or so, it's been very clear that it's not an end of a monetary era. Doesn't just mean currencies falling, inflation, and all values especially paper assets falling dramatically. But it also means a major upsets in the political system. And, we see in Europe and also in North America, we see very weak political leaders. This is part of the era we're in. We don't need to name any names, but let's say that there is basically no statesman in the Western world today, at least. And therefore, the latest problems Europe has seen, of course, is the UK now having a budget. Remember, it's a Labour government, a socialist government, and they basically the Chancellor of the Exchequer, which is the finance minister in the UK, said clearly at the beginning of her budget speech, we are going to take from the wealthy and give it to the needing people. That's Robin Hood tactics. I mean, it was nice. It sounded nice and romantic in Robin Hood's days, but today and that's what they did. They raise taxes dramatically. They do everything they can to chase the wealthy people out. 16,000 wealthy people have left the UK in 2025. And remember, those are the wealth creators at all levels, not just the super rich. They're people who start their own businesses, etc. And now with inheritance tax and high taxes, they can't keep their money. So why would they stay in the country? And it's a total disaster. The country only prospers if all classes do well, and if there is actually freedom to act, to open businesses and to run businesses, rather than just to receive subsidies or social security from the government. A person in the UK is now, they said, £18,000 better off by being unemployed and getting subsidies than by working. That's just ridiculous.
Yeah.
But that's what's happening in a socialist world. I always take East and West Germany as the example. 45, the war was ending, and Germany was split in two. West Germany, with the help of the West and injections, etc., became the strongest country in Europe and one of the strongest in the world, the strongest economy. Whilst Eastern Germany went into total poverty And that's just an example that socialism doesn't work. You can't just give to the poor. You have to have wealth creators in the country. So, and so that was the UK budget that we just saw last week. Now, if you take Switzerland just had a referendum. You can have Switzerland has direct democracy. Anybody can basically collect 100,000 votes and have a referendum on any issue. That is real democracy. Only country in the world which has this to that extent. It's a very, very sound political system. And basically, this was a young socialist that wanted to tax people with a fortune over 50 million Swiss francs by 50% inheritance tax. So they actually created wealth during the lifetime of 50, 70, 80 years, and half of it was just going to be taken away by the government. But Switzerland is clearly not a socialist country because it was rejected by 80% of the people. And that just shows you, sound political system. And people who just don't think that they should grab the money from the government and from the rich. So, I am Swiss, of course, and I must say there's a political system is so unique and so fantastic compared to any other system in the world that I know.
Yeah, well, look, I can assure you that having lived in the UK all my life, working for a Swiss business now, it is fascinating to see the compare and contrast. And the sad thing is in the UK, and it's going to be for other socialist countries, France isn't going to be that much different, is when you take away incentives and you take away aspiration and the ability for social mobility, then that creates awful problems and isn't going to get us out of the debt trap. So it was extremely encouraging and another interesting data point to see the Swiss taking an entirely different approach. Look, just in the interest of time, Egon, a few minutes left. You and I have known each other for 31 years, and it does feel like everything that we're seeing today is really coming to fruition. You had the vision, long in advance. I just wonder, how close do you think we are to the end game now, and the absolute necessity for central banks simply to print to the moon, as it were, to save the bond market at the expense of the currency? Just a final comment on that would be very interesting.
Well, I have to say a brief personal word, Jonny. So for 31 years, we have argued about stock market versus gold, and you have been obviously selling stocks at Morgan Stanley successfully for almost all those years, and stock market has continued to go up against my expectations, while instead we invested in gold, and luckily I beat you
again.
So because gold gone up a lot more than since 2000 than stock markets. But nevertheless, so then almost 2 years ago, you decided, if you can't beat them, join them. So you joined our company. I'm really pleased about that. And I have to say also that you are actually my son-in-law. So it's great. We have another son-in-law in the business, plus some other fantastic partners. So and what I want to do with this business, because wealth preservation is for generational wealth, preserving generational wealth. And that's why, this doesn't end with me leaving this world. And so I wanted the business to continue. I mean, I joke and say, I wanted to continue for as long as gold has been money, which is 5,000 years. Why not? I will look down every now and then to check that everyone's done all right. But I think this is, as I said, nature's money will always be there, and it will always be a corner of the financial system. And that's why we clearly, having studied history and having understood that every single monetary era ends in disaster. As I said, it ends in massive money printing, in inflation, in debt defaults, and then in banking defaults, and then in collapse of paper assets, and obviously a shift from paper assets to natural resources. That is what is taking place now, and I'm very clear about that. But it's not only the financial collapse we're going to see, because very few people, normal people, experience that, but it's actually the collapse of also the political system. Leaders will come and go. I've said that for years, that, I don't think most leaders will never stay until the end of their period. And even parties will be thrown out before the end of their period because of lack of confidence. Part of this also, and you can study history, is very clear. And this is the end of a major monetary era. It's also, the social structures will fall. Of course, governments will not afford to pay social security and all these subsidies that everyone is getting today in Europe and also in America. And therefore, there'll be poverty. There'll be people are going to have very tough times. So and then social unrest could be very unpleasant, and especially both in the US and in Europe now we have a high percentage of immigrants, and of course there will be civil wars between various groups of immigrants and the local population, especially, I'm sure there'll be neo-Nazi parties being formed. So we're in for a very unpleasant time. I mean, of course, we are helping people with wealth preservation in the form of physical gold and silver outside the banking system, which is absolutely essential here. But there's so much more you've got to look at. Most people can't move to a safe country, for example, but you've got to look at, your best protection in the coming years is friends and family. You've got to have a close group around you where you help each other, because it's going to be very, very difficult times. War is also part of the final cycle here. We're seeing wars in many places. Of course, Middle East, always wars there. Now Ukraine, and hopefully there won't be one in Venezuela, although Trump threatens to invade. So we see it's everywhere, and stock markets haven't discovered it yet, and sad, not sadly, but because there will be a very sad awakening one day when the stock market investors will realize that their fortune that they built up for the last 50 years, 70 years, whatever period they've invested for, that will all start disappearing very, very quickly. And few people will awake to the fact that they can protect their wealth now in solid assets such as gold and silver, and resource stocks, etc. So I think this is what we're here to help people. We're here to help people to preserve wealth, and that's just much more than thinking about making as much money as possible. As Richard Russell, who's dead now, God bless him, said. I mean, he was a very famous newsletter writer and very, very good on understanding markets. He said, when markets turn down, everybody's going to lose money. You mustn't think that some can be evade all of this, because we can't. It's going to be a tough period. So, as I said, preserve wealth, help each other. But then enjoy life, because life, there's always pleasure in so many things. As I said, friends, family, books, music, nature. There's so much we can enjoy without having too much money. We don't need much money.
Well, we have to live for the moment. But Egon, look, we're out of time. Thank you for coming on to the show. It's been a great conversation, and let's do it again sometime. Thank you.
Right, Jonny. Enjoy speaking to you. Thanks very much.
Thanks. Goodbye.